Tech Reimagined, redefining the relationship between people and technology. Brought to you by Endava. This is Tech Reimagined.
Hello and welcome back to Tech Reimagined. I'm Bradley Howes and I'm very pleased to welcome you to the latest episode of our show. Running now into Season 3, at Tech Reimagined, we look at how technology is influencing the fabric of our society, the way we work, the way we live, and the way we do business. Join us every Thursday on any of the popular podcast platforms and listen to our subject matter experts this season. And speaking of subject matter experts, I'm glad to introduce you this week to our latest guest, Scott Harkey. He's a colleague of mine at Endava, our EVP of Financial Services and Payments and Global Head of Marketing at Endava. He's also a speaker, advisor, and he has a multitude of other skills that we'll talk about later. In between all this, he also finds a place for hosting a podcast, the PayCLT, focused on the latest in payments. Welcome, Scott. Thanks for coming on to the show. How are you today?
Hey, Bradley. I'm doing great. Thanks for having me.
So before we start, Scott, do you mind talking to us about how you ended up coming to Endava?
Yeah, absolutely. So I started the first, I guess at this point I can almost say half, of about 15 years of my career actually working in large financial organizations. So doing, large scale IT initiatives, but really working on that side of things. And I guess about 8 years ago or so at this point, I left a large bank to go help a friend build out a new consulting company. So we built out a company. It was called Level, based in Charlotte, North Carolina in the U.S. And then about a year and a half ago, we were acquired by Endava and became part of the Endava family. So I came in through that door and really excited because for us at Level, we were doing many of the same things that Endava does. We were a much smaller scale. So it's been really fun to step into a company with a much larger reach, not only geographically, but also just in terms of the scale of the things that we can do as a company and the people that we have to help support that.
Excellent. Well, welcome aboard. It's already been a while, but welcome aboard. So today we'd like to tap into your payments experience and have a closer look at the current state and what the future holds in store for the payment sector. So let's start with an easy subject to talk about, and I'm still going to put you on the spot. Probably the question on everyone's mind is, how do you think that this potential recession is going to impact the fintech landscape and the innovation around it?
Yeah, I feel like I want to make a joke about the fact that you can't say the word because then it'll actually come true, right? I don't know what the equivalent anecdote is, but something to the effect if you say the word 3 times and suddenly it'll appear, right? So let's not say that word anymore. But no, I think it's without doubt that there is if nothing else, some slowdown in the economy while various countries kind of figure out what's going on and we look at what the greater impact will be. I think to some degree we see that in a lot of our clients as well. There's certainly a bit of a mental pause, at least, to understand, what is the impact going to be? Is this something we need to be changing the way we spend or thinking about the way, we allocate budgets? I think the fortunate thing for what we do is that digital transformation and more broadly the proliferation of technology and its impact on organizations is definitely not slowing down. What we often see is the shift of the types of projects that we're working on maybe changes a little bit. Sometimes the focus is on building net new products to go capture additional revenue streams, and that's kind of one phase of growth relative to how the economy is operating. Other times, like now, you see more of a shift from maybe less ambition around net new product and more around whether it's cost reduction or it's efficiency or it's how do you optimize the organization to ensure that we're using technology to be as efficient as possible. And so it's interesting because a lot of the organizations you work, like I said, they don't necessarily decrease IT budgets as much as redistribute how they get spent. And I think that's part of what we're seeing now. Certainly a little bit of a reassessment of the landscape from our clients. In some cases, already doing some shifting towards, what are initiatives that, again, maybe create more efficiency in the way we deliver products. How do we look at our IT infrastructure and say, how do we optimize that? And maybe a slight pullback on some of the more product stuff. But as we also saw with COVID, that sometimes can be really, really temporary. right? We saw a little bit of maybe it was 90 days maybe of a pullback while everybody tried to figure out, well, what do we do? Only to then see a massive acceleration in the type of work we're doing, because the answer was, well, we need to digitize everything, right? And so I think we're still seeing that theme play out some as well.
One of the other things that we've noticed during recessions is that often some of the future market leaders are born during those recessions. So examples are Microsoft, LinkedIn, P&G, Costco, Charles Schwab, FedEx, and the list goes on. What do you think are the major opportunities for new companies at the moment?
Yeah, it's an interesting question, and I totally agree. I think it's been, the last 10 years, there's been no shortage of fintechs and general net new entrants into the space. And it feels like that the last couple of years has been a lot about taking the value propositions offered by some of these newer ideas or newer companies and ultimately figuring out how to scale them, right? I think what the types of companies often, what those types of companies are often challenged by is in taking an idea that is good at a small scale and getting it to kind of enterprise scale where they can build, a big sustainable business off of it. A lot of the opportunities I see are around, I still think there's something around DeFi more broadly. I avoid using crypto because I don't think it's about the cryptocurrency itself, but I think in decentralized finance more broadly, I know we're kind of in a crash phase of that, and that everybody got all excited, and then all of that kind of crashed as the economy started slowing down. But I do think from a technology perspective and a way of thinking about how financial systems run, there's some magic in there, and so I think there's a lot of opportunity around distributed finance. Now, I'm not one that thinks it's going to overtake the existing financial system in some way. I think it becomes a technology or enabler that's part of the existing financial system. But I don't think we've seen a really strong value prop, a really strong kind of leader that's managed to crack through that space. And I think it will come. We have seen some companies there's one here in the US, Paxos, that builds a lot of infrastructure to enable, in this case, banks to bring cryptocurrency and other things into their environment. And that's the type of play that starts to make a lot of sense to me, right? We see some of the card networks doing similar things. How do you take that type of technology? Distributed ledger is another one where, again, I hate talking about it because it's such a hype thing, but I think it gets hyped in the wrong context. I think it gets hyped as some revolutionary thing, as opposed to an evolutionary technology that potentially creates a better way to transact in some specific scenarios. So I think that, for me, that's a space with a ton of opportunity where there's not a strong contender yet, but I would bet that something emerges out of this kind of quiet period that really takes that space forward in a meaningful way.
I completely agree with that, 100%. And private equity companies continue to back new payments companies almost every week. Still, at the moment, we're still seeing new startups in the space. First of all, do you think there's a need for new payments companies? And secondly, do you think there's still opportunities for differentiators?
Yeah, there's a niche for everything, right? You can always start a new payment company and just name it after another fruit or another variation of the word pay. I'll be honest, I struggle with this one. I struggle to see the differentiation. I think it's a matter of scale. I think it's easy to find a very specific problem. And when you think about how a lot of businesses start, the idea is you start with a very specific problem, often one that you personally struggle with because you either in a former employer, you saw that gap in the market and you see the opportunity. And so it can, I don't want to say easy, because starting a company and making it work is definitely hard. But it can be attractive to find a very niche problem, build a product around that, have a value prop. But I think where you always run into trouble is that by definition only has a certain kind of customer base that is applicable, addressable market, right? And so as you need to scale and as you need to get bigger, where do you go? And you inevitably go into space where everybody else is. And then I think that's where it gets harder and harder to differentiate. Like, what is this payment acquirer any different than this payment acquirer or this processor or this gateway? And I personally, I don't think there's a lot of space there. Again, I think it's easy to start out and as a fairly small company and find a little niche. But I think it eventually just consolidates into, a couple or maybe more than a couple, right? A dozen of these companies survive and thrive. A number of them just get eaten up by larger companies, and a number of them probably disappear. I don't think there's enough, open space in payments for there to be as many of these companies as there are.
Do you have a favorite tie-up between payments companies and retailers, or basically other companies that are taking payments? Do you have a favorite tie-up between those companies?
Maybe not specific companies, but I mean, there's a couple of cross-industry themes that I really like. I think certainly payments into a number of use cases. I love the automotive use cases with payments in automotive is, cars become connected, and because I come from the payment space, it's so easy to quickly see just all the interaction points the cars could have with the world if they were payment enabled. And there's the obvious ones like pay at the pump and those sorts of things, but it's way broader than that. And you think about in the U.S. drive-through restaurants are a big thing, right? And just all the use cases around arriving at a restaurant and being able to drive up, and you never needing to handle the payment part because your car is telling the restaurant you're there. Your account's already connected to a payment mechanism. It's kind of the Uber experience if you remove all the friction of the payment. So I love all the kind of payment use cases in in vehicles and things like that, in transportation probably more broadly. And I think there's a number of specific partnerships that exist between companies. Companies like Stripe have done a lot to really embed payments in a number of things. But to me, it's more about kind of the theme than it is necessarily like two specific companies that I feel like are a really good pair.
What's your view of companies like BMW offering value-added extras, like, I don't know, the air conditioning only during the summer months and then heated seats during the winter months? I think I got that the right way around. So what's your view on that? Because I see that as completely embedded payments because it is frictionless.
Yeah, I think it's fantastic. I think it will be interesting to see how consumers think about that, because there's a point of view to take of like, oh wow, they're nickel and diming us right now. They're charging us for everything. It's like the budget airline that charges you extra for a seat. It's like, what, shouldn't I get a seat? Like I'm buying an airline ticket. So I think there's the risk of, if it feels too much like they're just trying to extract additional dollars out of a person, it can not feel great, right? But I think if that's clear up front, or if that becomes the norm, it's actually really cool. So I have an example. I have a Tesla, and what the car that I had a bigger battery in it than I had access to, right? So I bought a certain version. Teslas, they used to have certain battery sizes, and you could purchase based on the battery size. And I bought a lower battery size. But the reality was they put the bigger battery in the car. They just software limit you to the size that you buy. And some people knew that and some people didn't. But what happened was, whenever they're later, what they added in the dashboard was, you could temporarily buy an upgrade to the larger size and turn it on and off. So if you were going on a long trip, you could buy more battery capacity that's already in the vehicle. If you didn't need it, because day to day you don't need it, right? You don't pay for it. And it's the same way with some of the auto driving functionality in the car now. Like you said, BMW and others have specific functionality that they can turn on and off. Again, from a customer standpoint, it feels like the ideal, right? You get to pay for what adds value, which is kind of a theme for me. Like anytime you can attach the value you're getting out of a product or a service to the payment you're making, or to the willingness to pay, that's ideal, because then it feels like I understand what I'm getting, as opposed to paying for a set of stuff that I'll never use. Now, again, where it can go wrong is if you pay the same price for the car, but then they also charge you extra for all these things, right? So there has to be a fair value trade there of, well, I get to pay a little bit less for the car as the initial purchase, but then I recognize that as I enable or utilize these other things, I may have to pay a little bit more for them.
Yeah. I always think it depends on the context of how you pay for the item. So we got a new car, and we were encouraged to download the Marketplace app, of course, and we're both smiling at that term. And in there were a whole load of extras that we could buy for the car. Now, I don't have a problem with that, because we lease the car, so we pay a certain amount each month for the car. However, I was quite surprised that it didn't come with things like Android Auto. I've got an Android. I know you're a big Apple fan, but I was quite surprised it didn't come with Android Auto. But I could pay a certain amount extra per month and get that. So I went on to some forums as soon as we got the car, because I was quite new to this, and somebody had written in that they just spent 80 grand on a top of the range model of this particular car, and were fuming that it didn't have Android Auto in there. And I can imagine, you spend 80 grand on the car, then you're really expecting it. But I just pay a few hundred a month, so therefore it doesn't matter to me that I can turn it on and off each month. So I think a lot of this is in context. Definitely.
I think some of that'll take time too, right? I don't know that the market's figured out the balance of how you really value that the right way, or how customers value that the right way, and how to price accordingly.
Yeah, it's quite brave for the auto companies, who are usually very tepid with innovation in this particular area. It's quite interesting seeing how some of them are dipping their toes in the water that can affect some of their brand positioning. For BMW to do it so publicly, I think showed a really brave move there. So what advice would you give to payments providers that are looking to future-proof their next decisions?
I think it's probably thinking about the long-term roadmap, right? Like I said, I think it's I keep kind of caveating the word easy, because I don't want to imply that it really is easy. I think it's easier to think of a roadmap in the context of a specific differentiator, right? As opposed to thinking, 5 years out or 10 years out, or whatever scale kind of metric you want to use. What does the product evolve into that's still differentiated, that still has a value proposition that's strong? And that's hard, right? Because, you don't know what's going to happen in the future, and technology changes and all these things. But I think spending a decent amount of time thinking about that, who are the ideal partners, who are going to be the competitors 5 years from now that aren't really even on your radar right now. And I think this is particularly interesting in the payment space because of kind of two broad trends. One, payment companies expanding into other areas, right? So you look at companies like Adyen, becoming a bank, right? Like, or having banking capabilities through the ownership of a banking function. You never would have put that on your dashboard, 5 years ago as a thing that you had to worry about or compete against, right? And the same thing the other way. You see the kind of evolution of PayFacs and non-payment companies getting into payments and monetizing payments, and suddenly they're competing with you as a payment processor or an acquirer. You may be competing now with somebody who would have been your customer before, right? Because they've now moved in through the PayFac model into owning more of the payment kind of value chain. It's that sort of stuff where I think you've got to really think about what is our value prop across all of those scenarios. And it doesn't mean you'll have one in every scenario, right? You may choose not to go one place or the other. But it's that kind of strategic thinking that I think is pretty key to making sure there's longevity to the business and kind of the ultimate potential for success.
Yeah, agree on that one as well. So before we let you go, do you want to give a shameless plug towards your PayCLT podcast?
Yeah, absolutely. So appreciate that opportunity. So PayCLT, again, I'm based in Charlotte, North Carolina, in the U.S., and PayCLT is a Charlotte-based organization of payments professionals, just purely that like to get together and talk about payments. That's the thing about being a payments nerds is you tend to find other payments nerds and like to talk about these things, right? So it's a local group. We have participation in the group from some of the large banks in the region, as well as services companies and product companies and students and everybody in between. So it's an open forum. And our podcast, so we have regular sessions once a month or so, and they're kind of closed door. So we try to keep the conversation in the room to just encourage openness and sharing. But then we do a podcast version of the conversations in order to expose some of that insight out more broadly. So we have guests from, some of the leading product companies. We have guests from some of the banks and others. And it's just a good dialogue about nerding out on payment stuff, from tokenization and all the fun bits behind that to broader trends happening and everything else. So I would love people to check it out.
Excellent. Where can they find out more information on some of the episodes?
Yep, all the major podcast platforms, PayCLT, Payments Hub podcast. If you get any of those words in there, then hopefully you can find it.
Excellent. Thank you so much, Scott. It's been really interesting talking to you about the world of payments. To all of our listeners, if you want to listen to more payments insights, please head on over to the PayCLT Payments Hub podcast and pick up an episode to start with. I promise you won't regret it. It is quite payment nerdy. That's my point about it. I hope that you enjoyed this Tech Reimagined episode. Thanks for joining us today, and really looking forward to doing so next week too. Please use the comments section to give us your feedback or just share and subscribe. Until next time.